Hey guys, Stock Saturday, and oh, it's been a rough week yet again. We've had sort of fairly interesting Monday, the Japan carry trade, as it's being called. People sort of borrowing Japanese yen at pretty much 0% and investing it in assets all around the world, really, sort of US stocks, European stocks, bonds, gold, and everything. Is starting to unwind, it seems, because the Japanese are putting rates up, and so sort of people in who borrowed and invested in other assets are now losing money on the currency because they owe sort of more yen than they originally borrowed, or higher value in yen. So yeah, we had sort of a huge gap down in sort of pretty much everything on Monday morning, except bonds, I suppose. But I am down 6.5% for the week, or 19,500. I have added another 4,000, which isn't included in that return. But yeah, so comparing to the markets is a little bit difficult. I mean, if you look at the S&P, it sort of says it's up 3.75% in the last 5 days, but that isn't really true because this doesn't sort of show the gap down from Friday. So if we just go on a trading view, I don't normally sort of go into this much detail, but it is quite stark. So it was showing sort of 3.75% up for the week for the S&P, but if you take Friday's close at sort of around 531, 530, sort of 532-ish, it's now at 533, so it's basically flat, and not the 3.75% that is showing. On the Nasdaq, it is sort of fairly similar, really. So it's showing 6.13% up for the week. But again, if you come to sort of the huge, great big gap down we had on Monday morning, or Sunday night, really, and in the futures, sort of gapped from 18,440 to 17,444. And so it's sort of up about 0.5% or something for the week. So yeah, it's not really as rosy as it's showing, but clearly I'm doing a hell of a lot worse because what has sort of gapped down has come straight back up again, and crypto and sort of gold stocks and all sorts took a big of a hit than the big tech. So part of the reason for the loss in the gold and silver miners is sort of Q2 results, I think, partly because gold hasn't really moved all that much. And yeah, I think a lot of the sort of big gold and silver miners are still sort of expanding, and they haven't really sort of taken the full gain from Q2 results. So Coeur Mining is one of those. I think people have forgot that they were hedging quite a lot of gold and silver in Q2. So I think I said last quarter that this quarter wasn't going to be particularly rosy because they sort of had a huge amount of, as they say in here, the hedging program was utilised during the construction and ramp up of Rochester. So I think they had like half of their production hedged at sort of much lower prices. So they haven't got the full realised price for Q2, even though it's up. So you get your people on StockTwits and sort of all these sites saying, you know, Coeur Mining can't even make money at sort of $2,400 gold, but that isn't really the case. But they did okay, even with those hedges. They took 222 million in revenue, which is up from the previous quarter. It's down on Q3 2023. That's just sort of due to gold ounces produced. They had 78,000 gold ounces produced, which is down on last quarter and quite a bit down on Q4 2023. Silver ounces 2.6 million, again sort of down on Q4, the sort of high. That should rise up again towards the end of the year. But a net income at long last. You know, they've obviously been expanding for quite a while for this sort of ramp up of extra silver. And yeah, it's been showing a net loss all this time. It's not really a net loss as such. But yeah, 1.4 million is very small, but this should start to increase quite a bit now that they're not sort of hedging, and yeah, the sort of capex and write-downs and losses aren't going to be there. And you can see EBITDA 49 million, pretty good. Adjusted EBITDA 52 million, so this is sort of way up. I mean, if you look, EBITDA in sort of this quarter last year was 4 million, 15, 25, 27, and now sort of just touching 50. And cash flow from operating activities 15 million, so pretty good. Capital expenditures down to 51 million from sort of what was around 100. And then we've got cash up to 74 million, but debt sort of rising, still rising, unfortunately, sort of 469 million to now 629 million. Hopefully this can sort of start to come down with the expansion finished. They can start paying off some of that with some decent free cash flow numbers, but it's quite a bit, 629 million. Costs as well. This isn't sort of all-in sustaining cost. Unfortunately, they don't seem to report that. But yeah, costs for per gold ounce 1264, almost exactly the same, and silver 1771, which is sort of broadly the same as last year, up on last quarter because they had a particularly good quarter on the silver side. I think the guidance is more important, really. People focus on sort of this quarter's results, again, forgetting the hedging and just saying, they're not making money at these prices, and sort of production being a little bit worse than expected. But I think if they were, if this was going to be a sort of permanently lower production, then they would be adjusting the guidance, and they're reiterating even in the second quarter this year's guidance of 310,000 to 355,000 ounces of gold, and 10.7 to 13.3 million of silver, which is pretty good. So I think as silver starts to move up, then they should get sort of a healthy upturn on this compared to sort of other people like Fortuna, obviously not doing much of any silver anymore. So yeah, this should start to be quite a noticeable amount of revenue. And they've updated their costs as well. So Palmagero is down in gold costs and slightly down in silver costs as well. They knocked $1 off the silver cost, and sort of $125 off the gold cost. So that's positive, but Rochester is significantly up. We'll have to see sort of now they've expanded what that looks like probably next year, really. Kensington stayed the same, and Wharf came quite significantly down, about $150 reduction in cost. So good to see. So Equinox Gold, fast becoming my largest sort of gold and silver bet, if you include the options as well. It's another one that people were sort of hoping for more, but I think are being a little bit short-sighted. They produced 122,000 ounces of gold, which is on the low side, to be fair. Cash costs, I'd never really look at cash costs, but all-in sustaining cost of $2,041. Not ideal, but they haven't got their new greenstone mine figures in here. It sort of just started ramping up in, I think, first gold pour in May, so that's not really ramped up, and obviously you won't have sort of commercial production, as they call it, until really the third quarter. Probably the fourth quarter will be the one to look at for greenstone, but third quarter should look a little bit better. But again, you get similar sort of people on stock twits and stuff saying, look, they can't make, they've got this new low-cost mine, sort of talking about it as if it's been open the whole of Q2, and saying even with the new mine, they're still not exactly making a fortune. But that isn't the case. So gold produced, as I say, 122,000, up from 111,000 last quarter, but down from last year. They sort of had a bit of a industrial accident with their Brazil mine. They've sort of had to sort of shut that down a little bit and mine a different part while this is sort of resolved. So they had a bit of downtime on that, and they're saying sort of even aside from Greenstone, the rest of their operations should be looking much better for the second half. And obviously then you add in the Greenstone figures, this should start to drastically come up. So that's good. All-in sustaining costs was affected by that as well. Was 1950 last quarter, and it's 2041. So that's not great, but yeah, the second half production and sort of full year production, that should look a lot better. But revenue, 269 million from sort of the higher gold price, obviously. Net income, this is sort of partly increased, it looks like, by revaluing the sort of share of the Greenstone mine, basically, and sort of having the full thing now. So I don't really sort of take that with too much. And this balance sheet is obviously something holding them back. People sort of seeing, 167 million in cash and cash equivalents, only up very slightly. Net debt has increased in just this quarter from 800 million to 1.3 billion, with buying the remainder of Greenstone. But sort of if the second half of the year, I know I keep saying sort of probably more quarter four, you should start to see some very high cash flow numbers, and they can start paying off some of this debt. But I guess people just either being a little bit impatient, or maybe there's something else they see, not wanting to value it that high. But yes, the guidance, 2024 guidance, hasn't really changed all that much. I think the top end of this total ounces is unchanged, 750,000 ounces. I think they lowered the bottom end by 5,000. Whether that means they're expecting lower, but anything sort of within this range, I think, is reasonably good. All-in sustaining cost 1635 to 1735. Again, not horrendous, and next year should look a lot more positive. If you look at their sort of presentation, they've been showing 2025 guidance as well. Hopefully getting towards sort of 950,000 ounces. So that should be pretty good. And all-in sustaining cost at, I think, about $1,400. And they've also suspended mining at Castle Mountain Phase 1 until the Phase 2 permitting is completed. So Castle Mountain wasn't sort of a huge mine. They're looking to turn that into a sort of 200,000 ounce per year mine. So yeah, that's not a huge knock, but sort of is a little bit of a knock, and I guess that's partly why they lowered the guidance. But yeah, the more I look, the more this looks like sort of my favourite bet for certainly the next year. I think they're at 1.7 billion in market cap now, and they're looking to, they're still sort of reiterating around next year. They're looking at sort of 1 billion, maybe 900 million of EBITDA, which is enormous. They're at sort of nearly 1.8 to 2 times EBITDA. So that would be incredibly cheap. So Fortuna Mining, as they're now called, not Fortuna Silver Mines. They're sort of one of the only ones at least posting some reasonable numbers of mine. Hasn't sort of pushed the share price up, unfortunately, but maybe it's coming. Gold equivalent production, well, I never like gold equivalent production, but gold production of 92,000 compared to 89,000 previous quarter. Silver production of 990,000 compared to 1.07 million. So yeah, that's down a bit. That's going to continue to be sort of almost gone, hence the name change to Fortuna Mining. So yeah, we are looking at sort of more of a just 360,000 ounce gold miner going forward. all-in sustaining cost of 1656 compared to 1495 in Q1. Adjusting for San Jose, consolidated all-in sustaining cost of 1584. So San Jose is still sort of high while they're mining sort of the last little bit, but you might as well carry on mining it. Are showing growth as well. There's more in the Segala mine than they thought, which is very nice, and their sort of pure exploration project, the Ambasud, is sort of showing more promise. They're doing drilling and all sorts there. So good to have something for the future, because they have been very much a mining now but not much for the future sort of company. Even the Segala mine is sort of 10, 11 years, so it won't last forever, and their other mines are sort of 2, 3, 5 years, so that's not great, hence why Fortuna has never sort of been a huge position of mine. Yeah, figures look pretty good. As I say, this is sort of the cash now miner, as opposed to sort of looking forward to next quarters. Revenue of 260 million, up from 158 million. Mine operating income up a hell of a lot. Operating income up 619%. Lovely. Yeah, that's because of sort of expansion and the Segala mine, obviously. Net income at $40 million, so that's pretty good. Sort of, annualize this, and it's like a tenth of the market cap, which is pretty good, I would say, for net income. Adjusted EBITDA of 112 million, so that's pretty strong. People sort of seem to like to use enterprise value to EBITDA, so yeah, that's pretty good. Depends on sort of capital expenditures, really, but that's not going to be huge for Fortuna sort of going forward. I think they're just going to mine what they've got, and they've got their small exploration project, so they're going to be a highly cash generative business for a good while. All-in sustaining cash cost of 1656, so that's down from just about 1800. So that's quite good, more profitable. And then the balance sheet, yeah, I wasn't particularly pleased when they did this, but issuing a load of convertible debt to pay off the existing debt, basically, diluting to pay that off. I thought when you've got a highly cash generative mine and sort of high free cash flow numbers, not really sure why they needed to dilute to pay off that debt. But so you've got convertible senior notes and convertible debenture, 218 million, less cash and cash equivalents, some restricted cash, but yeah, if that goes over a certain price, then this all gets converted into shares and they'll just be net cash. So yeah, it is what it is. I guess, whatever they're going to use the cash for then, if they start doing sort of buybacks once gold is at a higher price, then that'll just be an awful waste of money. But maybe they'll, I don't know, buy another small miner or something, or try and sort of expand the growth prospects with their some of their mines being shorter life. But yeah, they don't seem the best best allocators of capital. Maybe there's some sort of secret source here that I'm not aware of, but you can see why they're not my biggest position. Just thought I'd have a quick look at CleanSpark as well. There's not really sort of a huge amount to see here, because we see the results as is every month. So obviously we've already seen July's results, and this is sort of out of date. The cash and Bitcoin amounts are out of date. Liabilities, 67 million in current liabilities, 73 in total. Nothing too bad there. None of that is, or not a lot of that is debt, I don't think. Just coming down to the balance sheet. So yeah, current assets, that's a little bit out of date still. Yeah, current portion of long-term loans, 9.6 million, up from 6.9. But the long-term debt is down from 8.9 million to 1.3. So some of the debt has come current, but it's down in total from sort of 16 million to just touching sort of 11 million. So pretty good. I will have to put these into my model. I'm aware that I didn't do a video on last month's or last quarter's results. I might have to sort of feed this and riots in and see what we've got. Revenue, Bitcoin mining revenue, 104 million, up from 45 previous quarter. That's obviously pretty good, but you've had costs increase drastically. So cost of revenues 45 million. Payroll and everything, general and admin. I don't take this loss or gain of value of Bitcoin into account because that's, well, it's not really, it goes on my spreadsheet, of course, and is part of the valuation, but it's not something that I look at. I do look at depreciation, of course, 40 million, and then you've had a one-time impairment, so I would remove that as well. But yeah, so they're showing 249 million loss, which isn't really a long-term loss. But yeah, so I'm sure the sort of news will say that it's awful and similar to the gold and silver, really. You know, CleanSpark can't even make money at sort of in Q2 what was all-time high prices and some minor fees as well. So economic news-wise, there wasn't really all that much this week. We had the ISM non-manufacturing PMI, exactly as expected, 51.4, up from previous quarter. So it's slight expansion. Everyone seemed pretty happy with that. Prices up as well. Manufacturing employment back above 50. That was 46 forecast, and sort of 46.1 previously. So strong number. People sort of happy that, well, pretty much everything is in the 50s. Business cycle potentially looking up. So looking at the portfolio, a lot of my stuff took a knock. Taiwan Semiconductor took a knock, but did quite quickly come back from it, so that was good. Similar with Broadcom, although it is still a reasonable amount lower than the highs. Prosus doing pretty well, 32.28 now. 10 cent, obviously the bulk of that gain. Vanguard Emerging Markets, again, touching 10,000. It's sort of possibly on the sell pile for more options. I know I'm sort of throwing good money after bad, but it feels like the best risk reward. Stellantis continue to take a bit of a hit. Obviously, their earnings were a bit crap. Hymax, I believe, have released their earnings. They look okay. But yeah, I'll have to have a bit more of a deep dive. Market sort of has taken that fairly horribly, and that's down to 555. And then yeah, my smaller minor positions sort of still not looking particularly good. Rio Tinto potentially on the sell pile, with me sort of not having as much of a focus on iron ore going forward, I don't think. So the ISA took a fairly large hit. CleanSpark down to 1146. Sort of didn't take the events earlier in the week particularly well, and sort of hasn't really recovered. Coeur Mining down to 544. Equinox down to 498 as well. Sort of not liking the results. Riot Platforms at $8. Again, that sort of had risen to sort of $12 before, so not doing all that well. And yeah, other positions, sort of smaller positions, not doing particularly well. I do have still the REITs, American Tower and Vici, sort of looking up on this cutting rates environment. So yeah, there is sort of potentially £4,000. I keep putting £4,000 into the options, and I don't know. You know, obviously the next year or so, the options to me would look a much higher risk reward certainly than REITs, and sort of 4,000 in REITs isn't exactly gonna move the needle. So that would be potentially on the sell pile, but we'll see how sort of the rest of August goes and maybe into September. Interactive Brokers is looking a little bit rough. Pan American, I will have a look at their earnings possibly next week or the week after, but wasn't particularly positive. So 1911 now. and KGHM still coming down a bit with copper coming down. And the invest account is where it's sort of taken a fair bit of a hit. Chinese tech obviously not particularly moving, but again, a rather attractive Baidu and Alibaba together making 4,000 quid. It's sort of potentially a sell-off and put into options. We'll sort of see what does best. But yeah, this is sort of starting to look like, as I say, throwing good money after bad. But I put quite a bit into Equinox, 652 options now. Coeur mining sort of coming down quite a bit. Equinox, I should say, come down a fair bit as well. Hive, put a fair amount into Hive. I think this was sort of 130, 140 last week. So have put quite a lot into Hive. And he's looking good to me. Riot sort of left the same. That's come down a little bit. Himax has come down tremendously. So yeah, down to sort of $5.55. Now a £5,000 position. This was a £23,000 position, I think, at one point. I was sort of thinking this was the start of much more positive results and sort of my thesis on the stock coming true. But yeah, I do think it's possibly just a temporary knock, and sort of into next year things should look up. But yeah, the options are sort of incredibly volatile on that one, so we'll see. Core Scientific still looks pretty good. It's basically sort of towards the highs of where it has been. And then yeah, smaller positions. So another the £4,000 I had in cash last week has all gone into Equinox and Hive pretty much, and I've reloaded another 4,000 in. That's pretty much all the cash that I've got now. And so any future cash injections will have to come from a sale. So I've got Baidu and Alibaba, potentially Vanguard Emerging Markets, Rio Tinto, and possibly XRP on the crypto side. But we'll see sort of what does best, and unless my thesis changes on all of these, that will be where future cash is going for sort of probably the next couple of months. So leave your thoughts in comments below, and like and subscribe. See you soon.